if they just changed a few numbers in the financial statements and they just passed their loan covenants, then the bank wouldn't call the loan and the organization wouldn't close down and people wouldn't lose their jobs. Hundreds of people or thousands of people wouldn't lose their jobs, if they just changed a few numbers on the financial statements. So that's how they justified in their own minds what they're doing, because they know it's wrong.
Hello, and welcome to another episode of It Depends, a podcast series brought to you by Hanseman Weeble. You know that if you've ever talked to an accountant, they've told you, well, it depends. This podcast series is for business owners, leaders, operators, accountants, or someone just wanting to learn more about the accounting industry. I'm your host, Clarissa Hoffman. We are joined again today by Ed Schmitz, a partner in our auditing and accounting department. Thanks for joining us again today, Ed.
Sure.
So today we are going to talk about internal controls. At the basis, what are internal controls?
Well, the Committee of Sponsoring Organizations, they developed an internal control framework, and they define internal control as a process effected by an entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the achievement of objectives relating to operations, reporting, and compliance. So in other words, it's the processes, policies, activities that the organization puts in place to protect their assets, ensure accurate and reliable financial reporting, comply with laws and regulations, prevent and detect fraud, waste, and abuse, and promote operational efficiency within the organization. So therefore, everybody knows who's doing what, who's reviewing what, how transactions get recorded to prevent accounting chaos.
So it really is the heart of an organization's accounting department.
Yes, very important.
What are the broad types of internal controls?
Well, there's two broad types. There's preventative controls and detective controls. So the preventative controls are going to stop the problems from happening in the first place. And I say problems because it can be fraud or it could just be errors. So you want to stop it before it happens. Examples would be segregating duties. It would be reviewing invoices. Detective controls are going to identify the problems, whether they're fraud or errors, after they occur. And you want to detect them as quickly as possible after they occur.
So that you can correct them more easily.
Exactly. So examples of that would be reconciling accounts, various accounts. So bank reconciliations come to mind, but even reconciling subledgers to the general ledger, such as accounts receivable and accounts payable, things like that. And it could be just a general review of the financial statements each month. So either by the owner of the business or the board members or the executive director of a nonprofit, things like that.
How do these two types of controls tie into the fraud triangle?
Okay, let's talk a little bit about the fraud triangle. So Dr. Cressy, in his studies of various frauds that occurred, he typically found three things that were in all frauds. And those are the three sides of the fraud triangle. So there's financial pressure, there's opportunity, and then there's rationalization. The first side of that is the financial pressure, and that can be personal in nature. It could be, the person needs money to pay their bills at home, things like that. But it could be operational as well. So it could be financial pressure. Maybe the organization has a loan with loan covenants, and they failed the loan covenants, and the bank's about to call the loan, and they don't have the money to pay for it. So it could be personal or organizational in nature. The opportunity, that's where the organization has the most control. Really, the organization wants to reduce the opportunity as much as possible. And that's where the controls come in. That's where they're going to have the preventative controls to keep the bad things from happening to begin with, but then the detective controls to catch it if it does and to correct it as soon as possible. And that's where they have the most control. The third part of the triangle is the rationalization. So that's really how the fraudster explains to themselves justifying their actions. So in the first case I mentioned about the personal financial problems, it could be that they're just borrowing the money for now, and they're going to pay it right back. As soon as things get better, they're going to pay it back. From an operational side, that example, it could be that if they just changed a few numbers in the financial statements and they just passed their loan covenants, then the bank wouldn't call the loan and the organization wouldn't close down and people wouldn't lose their jobs. Hundreds of people or thousands of people wouldn't lose their jobs. if they just changed a few numbers on the financial statements. So that's how they justified in their own minds what they're doing, because they know it's wrong.
So earlier we talked about segregation of duties. Can you talk to us a little bit more about that?
An organization wants to make sure that one person can't control a transaction from beginning to end. So typically, you're going to want to separate, authorization, part of the transaction, from recording the transaction to reconciling the transaction, and then maintaining the custody of the assets involved in the transaction. It could be cash, fixed assets, inventory.
If an organization is just getting started, where do you recommend that they start with developing and implementing their internal controls?
I would recommend that they purchase Linford Graham's book on internal controls, because that book was really written for organizations to do exactly that. It was not written for lenders to evaluate internal controls. It wasn't written for auditors to evaluate internal controls. It was written for organizations to be able to design, implement, and document their internal controls. And then from there, using the resources in the book, I would just walk through it and, really look at risk assessment of the various transaction cycles. What could go wrong in the various transaction cycles? That's basically what the risk assessment is. And then once you've identified what can go wrong, what are you going to put in place to make sure that doesn't happen? Or to detect it as quickly as possible if it does happen. So that's where the controls are going to come in. And the book does a really good job of laying out, the transaction cycles, what to be thinking about, what control objectives are out there that organizations should be trying to design their controls around. What are they trying to accomplish with these various controls in the various transaction cycles? And then from there, really documenting the controls and then designing it and implementing it so that there's documentation to show that the controls happened. So as auditors, when we go out there, we ask, okay, what are your controls? And then show me where it occurred. So one of their controls is that this manager reviews these invoices or these postings, and we look at them and there's nothing on them. Well, how do we know that it occurred? So if they go to the effort to review the postings and the invoices, well, just go ahead and initial and date it, and that proves that those controls occurred. So, to document all that, and then all that documentation as well is going to help train the employees. And that's going to really help with the operational efficiency I talked about earlier. Everybody knows who's doing what, who's responsible for what, because obviously you can't have everybody in an organization buying things and going into the general ledger and posting things, and it would just be accounting chaos. The book does a really good job laying out the process, and we've had clients use it, and they've had a lot of success using the book.
Well, thank you so much for your time today, Ed, and sharing your knowledge on internal controls with us.
Sure. And what's your next topic?
Well, it depends.